This is a nice little segment we're going to do. Quant meets tech. Back when I was in Tasty Trade on the show, hosting every day at noon, we used to do this type of a segment. I wanted to bring that back together. This is where a tech looking at charts joins with a quantitative analyst. I'll be the tech, Katie will be the quantitative analyst, and we're going to show you analysis on Caterpillar, and then Katie is going to bring you a look at the strategic option approaches is that you can do based on the analysis that we're looking at. So let's just switch over now, take that off for a second, and we'll look at the chart of Caterpillar. So for those of you that happen to be brand new, what we're looking at here are charts of, on the left side, let me just get these pointers up correctly so I don't, there we go. So on the left side here is a look at the weekly, on the right side is the daily. And we're looking at cycle analysis, which is essentially the heartbeat of the market, the rhythms and the individual symbols. Every symbol has its own rhythm, its own cycle periods, though like symbols often have very similar or the same periods. Now you can see in here, and I'm just going to blow this up, right here, you can see that Caterpillar has got some pretty consistent cyclical periods in there. Now I'm going way back here to 1919, and that shows you these beautiful rhythms in the market. We'll just look at these last three right over here, and you can see where this was coming down. That's where this correction came. It was perfect. And this area in between plus the ideal low, which is plus or minus a few weeks, is where you normally would get the low or the trough. You had the shooting star here, and that's giving us a warning that it's turning back up. Now, I want you to see something that's important to look at. This is our reversal scout. Like Matt showed you on the 15-minute chart, here it is on the weekly chart. And when it's turning up, it gives you a pretty good indication of the cycle low having occurred. And when it turns down, it gives you a pretty good idea of a cycle peak having occurred. I want you to see momentum in here is still negative. So while we're looking for a bottom to form in here, we still have to have some caution around that. It means that the approach that we would take would probably be cautiously bullish right now. Let's take a look here at the daily chart, and you can see, well, a pretty similar thing where you have the cyclical rhythms in there lining up. There's a dominant cycle and a minor cycle that shows up. This is really interesting because you see when the minor cycle is coming down and correcting, but the dominant cycle still is moving up. That's how you get formations that tell you things are bullish, because it runs out of the downward pressure on the minor cycle. It forms the triangle, and then when you get into the next rising phase, it moves up. You might hear that triangles have a 2-to-1 risk reward of coming out of them in the same direction as they went in. This is why. And we teach this in the cycle workshop. You can see the same thing here where the cycle failed. You got this rally right in here, but it failed in resistance. That gave you a flag. It said it was likely to come out on the downside just as it went in. Momentum in here negative, as you can see, and it came down right into this cycle period right over here, created an island. Now that island bottom right at the point where the daily cycle and the weekly cycles are all saying a bottom says to us that it's pretty likely that this is going to be moving to the upside again. Again, momentum negative in here. And you could see the slim ribbon PO giving you these signals in here that says the stock still isn't in the greatest shape yet. We need to see some improvements in here. And upside targets are right over here, about 249 up through about 257 with a potential at 264. So that's the kind of thing that we're looking for over these next several weeks. And overall, this is a cautiously bullish look at cycle analysis. The sum of the evidence says that the bottom is in place, but it has still work to do, but likely to find buyers. Maybe after those tech stocks stop moving up, they'll start to look into cyclicals like this one, and it will begin to move up. Cautiously bullish. Katie, I'm going to turn this over to you as our quant right now. What would you do under cautiously bullish conditions as far as options go?
Okay, I have a couple of ideas. Let me share my screen
Sure.
first. All right, so we're going to look at some options trade ideas on the Tasty Trade platform. They are our preferred options trading platform. And if you like what you see after we have spent some time there, then please go to the askSlim homepage, hover over this Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more and open an account with them. And doing that with our link here helps you with a special bonus and also helps us. Now let's go over to Tasty Trade. I have Caterpillar loaded in here, and I'm going to be using the December 29th expiration cycle with 49 days to go. The monthly expiration, December 15th, only has $10 wide strikes, whereas the weeklies have $5 wide strikes. And that's going to allow us to be a little bit more flexible with our strategies, especially for those who might have smaller accounts or who have a lower risk tolerance. Now, in my opinion, the analysis that Slim showed us is perfect for layering strategies. And what I mean by that is that we're looking to the bullish side, but the price action and the momentum are not confirming that yet. So if I were going to be placing a trade now, what I'd be looking at is a more neutral to bullish strategy. And then as price and momentum start to confirm a bullish hypothesis, then I would add a more directional strategy. So, one neutral to bullish strategy is a jade lizard. It's a combination of an out of the money short call spread and an out of the money short put. When we set that up, we need our total credit collected to be greater than the width of our spread. So that will ensure that we have no risk to the upside. So let's set this up. Tasty Trade has this strategy feature here. We can click on the down arrow, find normal jade lizard, and hit go. And that will throw a jade lizard in here, but it's up to the user to then move the strikes around. Now, I want to give us some room to the upside so that we have some profit potential in case the stock does not move very much. So let's move this call spread. Actually, I'm just going to leave it right there, 245, 250 call spread. Now, remember I said that our total credit collected needs to be greater than the width of that spread. So we need more than $5. So let's move our short put up to the 230 put. That is going to give us a total credit collected of, let's just move it up to $6 and lock it in so that we can just use the math like that very easily. So $6, and then let's go and take a look at the risk graph there. All right, so notice that we have a max profit zone between our short strikes. This is 230 is our short put, 245 is our short call, and this max profit zone is $600. Okay, so max profit is $600. Now below 230, our profit starts to decline down to our break-even point at 224, which is just around our cycle low support. Now, if price breaks that level, you're going to want to close this trade anyway because the hypothesis will no longer be bullish or even neutral. Now, above 250, where our long call is, our profit potential goes down to $100. So that's not as good as this zone in here, but still profitable. And this is where I would layer on another strategy. Now, Caterpillar is an expensive stock, and this is an undefined risk trade. It uses a lot of capital. In my account, it's over $4,000 to place this trade. So let's go back to the table page, and I will show you how you can define your risk. So our undefined risk is here on the put side. So I'm going to go and buy a further out of the money put to define the risk. And that's also going to lower our capital requirement. So I need this credit to stay above $5 to have no risk to the upside. So that means I have about $1 to use to buy a put. So let's go and buy we can try the 210 put, but that drops us down to 490. So let's go down to the 205. The 205 put, notice that that cut our capital requirement by a lot. Now, it also did cut our profit potential, especially above that 250 level. If we go back to the curve view, notice, I want to drag this over. Notice that it went from $100 down to just $60. So with options, there is always that kind of a trade-off. Now, this profit zone in green, as I mentioned, basically covers the area from the cycle low support on the chart that Slim showed on the daily up to about the bottom of that resistance area where we have our projection. And also, for those of you who are familiar with option strategies, buying that put has basically turned this into an iron condor, a skewed one. So then once price and momentum starts to confirm bullish, you could go in and enter, say, a call debit spread. Now you can make it as wide as you like, depending on your risk tolerance, account size. So a $10 wide would look like this. Let's buy an in the money call, say the 235. And then we're going to go and sell an out of the money call against that to reduce our cost basis. Let's sell the 245 call. This requires that we pay a debit of $5.25, 525, that's our max loss and capital requirement. Our max profit is the difference between the width of the spread and the credit collected, in this case, 475. So here is the risk graph of that. And basically, we just need a move higher. So those are two possible options, trade ideas that you could consider for that type of analysis. Back to you, Slim.
All right, that was just absolutely super well done. I am sure that people look at that and thought, "Wow, that is great! A great showing of one of the best platforms and options, and that's Tasty Trade, and how you use that." It was just great that Jade Lizard was already in there. All you have to do is click that button, and it sets it up for you. So that's it. That's Quant meets Tech. That's a look at putting together the askSlim analysis with the option strategies. And you can see Katie really knows that stuff. Great work.